More slop and chop, or will the head and shoulders come through? That's the question we're going to try to answer this week. Hey, everybody, Courtney Smith here with Wall Street Winners. Love having you here. Love reading this. I mean, every night before I go to bed, I read this. I go to sleep like a baby. All right, let's take a look here. This is going to be a little bit longer than our normal Wall Street Winners, but because there's just so much to cover here. Here we have the potential head and shoulders. You can see the left shoulder, the green squiggles are the left shoulder, the head, and the right shoulder from left to right. Then up at the top is what's called the neckline, which is basically where we would be getting confirmation. So if the market breaks above that neckline, that would be a confirmation that the head and shoulders is in place. But most people don't understand chart analysis. They think they do, but they don't. But having studied under the masters, I think I do. One of the key elements of any chart pattern is volume confirmation. Right now, volume is not really super confirming this pattern. I'd have to look at it and say, definitely not, but not definitely yes. So that still puts this potential head and shoulders in question. But if it breaks above 2820 on the S&P 500, that would be an explosively powerful bullish signal. So watch that 2820 level very, very closely. Now, last week we talked about how for the first time in months, we saw more buying pressure than selling pressure. That's all gone. The selling pressure came back and pushed the Dow down to these lows. So that's a negative in the marketplace. NASDAQ, you know the story. I'm just repeating what I've said for weeks. The only thing I would add, though, is that the momentum of this index is starting to turn a bit more bullish. In other words, it may start closing the gap with the Dow and the S&P 500. It's been the weakest. It may start to stop being the weakest. Now, I'm probably a week or two too early with that comment, but let's keep an eye on that. Our seasonality indicator is neutral, and we need a close above 159 to turn me back to the bull side. Not likely to happen in the next week, that's for sure. But it's neutral now. There is no bearish seasonality period. There's only really on a broad perspective. Seasonal chart, Stock Trader's Almanac shows us that we have a little dip here in November, and then clear sailing till the middle of December, then a little dip, and then more clear sailing. Sounds pretty good. Now, Ned Davis is probably a little bit sharper from a mathematical point of view, and you can see he's got that big dip late in October and also here in November. So I think we're going through that dip right now. And then notice really here in the coming week, as we get to Thanksgiving, we start to see the market really pick up seasonal strength. Next week, Wednesday and Friday are two of the most bullish days of the year. So look for next week to be bullish. Will it be bullish enough to break the head and shoulders? Well, we'll have to wait and see. Yield curve. Not much going on here that we haven't talked about. Asset allocation, you can see last week it came down, meaning they shifted money out of stocks and into bonds. This week, a bit more stable, kind of a mixed bag. Stock market risk indicator coming down. They're going more, investors are hunkering down. They're saying, we want to be in stocks, but we don't want to be in those sexy NASDAQ stocks. Let's be in those boring stocks like consumer staples like Kellogg or Johnson & Johnson or utilities like Duke Power. That's where we want to be. Global shares, really, I don't care. Okay, bonds are really, really important this week. 4 times we've touched that level of about 115. 4 times. It should break this week. We should see it break this week. And strong bond prices mean lower interest rates. So this is a big deal. Lower bond yields would give a boost to the stock market, which would then break through the head and shoulders bottom, would confirm it. Lower interest rates would hit the dollar. It would be bullish for gold. You get the point. What bond prices do affects everything. The only negative here is the purple predictor is not that great, but look for bonds to break to the upside this week. Our bond key factors say the same thing. Up at the top, the green line is bond yields. You can see they came down a little bit. The CRB index is next in line. That's the chart. It's plunging lower. The blue line is moving lower. Those are 10-year treasuries in Germany. The only thing that's not really coming down is the price of gold, which is the bottom one. But the most important ones are going down, suggesting lower interest rates. Now, in the dollar, I've been showing you the big head and shoulders bottom there for several weeks, and that formation worked out perfectly. Now we're in this big channel, and because of the lower interest rates, we should expect the dollar to come under pressure and move to the lower end of that channel, down around 9,600. A cheaper dollar means gold should perk up, and I'll be darned, it is perking up. We had that test of the yellow line that I showed you last week, and now we're starting to move higher. Still not super bullish here, but I'm starting to develop a little bit more bullishness. Why? 2 out of 3 of our key indicators for gold are now moving briskly higher. Not slightly higher, not grinding higher, briskly higher. So that's pretty bullish. Only the CRB is not responding. So count me in the somewhat bullish category. Not bullish enough that I want to go spend money on gold, but boy, if we can get a little bit more confirmation, break to a new high, I'm going to be all over the gold market. Oil came under further pressure, as we discussed last week, but starting to perk up here on anticipation that something might happen on the supply side. But overall, this situation is getting more and more bearish every single day. I'll probably go into more detail next week. Bitcoin broke down. We talked about this, well, we've been talking about it for a month, but since it broke the low end of the range down there, I got to be short. You got to be short now. This is not a bull market. This is a bear market in Bitcoin now. We broke down. The purple predictor collapsed, showing that the smart money, which had been getting bullish, is just thrown in the towel. They basically said, okay, we give up. We don't want to own this garbage anymore. We're out of here. So look for this market to continue to move lower. My first target is 5,000, and then I think there's a very good chance we get down to 4,000. Probably not 3,000, but there's a very good chance we're going to head down to 4,000. All right, who cares about this? All right, be sure you've got this. Very important. This is your roadmap to what to do next year. I'm telling you what's going to happen next year, this year, so make sure you've downloaded that. And, of course, we get all our great stock ideas from Stock Butler, so go check them out. They're great people, modest price, and you can find some great stocks and great trades there. All right, all you freebies, love having you here. Let's get on to our serious investors now.